Hello, chart watchers and Decision Point faithful. Welcome to this Monday, November 11th, Veterans Day 2019 edition of Decision Point with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, we welcome you and hope that you will join as part of our Decision Point faithful team here. And for our Decision Point faithful, of course, welcome back. So happy Veterans Day to you, Dad.
Thank you. Same to you. And, just a comment, when I was in the Air Force, I never got a Veterans Day off.
I know. And now since, I have to say.
Here we are again.
I know. Yes. So in case for those of you who don't know, my dad is a 20-year veteran of the Air Force. I actually served as well, but only for 8 years. But certainly continuing to follow in your footsteps, Dad. I don't know what is up with that.
I know.
From the Air Force to the stock market, and here we are.
Here we go again.
All right, so here's what we're going to be talking about today. Of course, we're going to go over the broad markets and do our Decision Point Scoreboard Index review. We'll also look at the sector scoreboard. We'll cover today's DP indicators and what they're telling us. I wanted to go over particularly gold today because we did get a neutral signal that came in on gold. And also, I had written about the put-call ratios, I believe it was last week or in the Chart Watchers recently. I don't remember. I write so much now. But in any case, I think I wrote on Wednesday about the put-call ratios being overbought. And I wanted to just kind of go into an example of what I meant there because there was some confusion when I was discussing it on email with one of our viewers. So I do want to make sure that I clarify that. And then of course we have Carl's grab bag, which will be the final segment, but we're going to be having a discussion, of course, the entire show about what we're seeing on the charts. So let's go ahead and get started right away here. Decision Point scoreboards, as you can see, everything is in green. What isn't are the long-term PMO signals. These are derived from the monthly charts. So we look at the monthly PMOs and then we determine, of course, where the monthly PMO is in relation to its signal line. And currently, the last signal was in November. We've gotten those sell signals and they are still, sorry about that, they're still in play. But I'm going to look at a monthly chart or two because right now it looks like we might actually switch those over to a buy signal at the end of the month if everything stays the way it is. And there's a lot of month left to go, well, 2/3 of it. So we could certainly see those signals not come in, but I did want to show you those charts. The sector scoreboard right now, we recently got a neutral signal on the real estate sector. And what that means is that the 20-day EMA fell below its 50-day EMA for XLRE. It's neutral because this occurred while both EMAs were above the 200-day moving average. So if they had been below that, if we had a 50, 200-day negative crossover, and then we got that 2050 negative crossover, then we would make that a sell. But at this point, it is a neutral. It's still a concern. It's just we name it a neutral instead of a sell based on the overall bullish or bearishness of the chart, which is determined by whether the 50 is above or below the 200-day EMA. And currently, for real estate, the 50-day EMA is above that 200-day EMA. All right, let's go look at a couple of stocks here. Ignore that. All right, so I'm going to actually start off with our relative chart just so we can see how the broad market indexes are doing relative to the S&P 500. And what I have noticed is the OEX, those big large cap companies, are certainly outperforming the S&P 500 right now. And you can see with the mid caps and the small caps, we're really mostly flat as far as relative performance to the S&P 500. So they're doing just about the same as the S&P 500, but we're seeing outperformance in particular from the S&P 100. And the Dow, we're seeing those Dow Industrials starting to outperform just a little bit above the S&P 500. I think it's really interesting, though, that we are seeing a relative high right now for the NASDAQ 100's performance against the S&P 500. And, you know, the last time we hit a relative high like we are right now, of course, that did come before we had that decline back in May. So just something to keep in mind. And, you know, this relative reading is the highest we've seen all year on the OEX. So that also is something interesting to keep in mind, I would say. All right. As far as just the broad markets performance, price performance goes, we are seeing some improvement here with mid caps. They are trying to get up to the all-time high that they saw last year. Not quite there. S&P 600, we're still well below those all-time highs. And as you can see, Dow, the NASDAQ in general have managed to overcome and make those new all-time highs as of late. All right, I want to pass it to you, Dad. I want to show everybody you wanted to talk specifically about the SPY and the S&P 500, and I thought that would be good to do right now, and then we can look at some of those indicators.
Okay, I've got it.
There it is.
Just looking a little closer on the SPY, note we're in a rising wedge formation that is most likely to resolve downward. And if it does resolve downward, as soon as it breaks down, it has met the requirement of the formation. However, so it may bounce back up and continue on its merry way upward. But more often we would expect it would go down some. Mm-hmm. Note that PMO is still rising. We've got a negative divergence on the OBV for the SPY, but that's based on SPY volume. If you look at it, I think I covered it last week. If you look at the S&P 500 chart, it's going to have an OBV with rising tops, which confirms the price movement. What I really especially wanted to show today is this crummy volume we've had Friday and today. It's just really, really bad volume considering, okay, it did close down like a hair, but it's still in a positive mode, and yet we've got really contracting volume here. Note that on Friday, the VIX hit the top band, or almost did, close enough for government work, and so that's overbought, and maybe, you know, we're going to look for a pullback, something like we had here. Sometimes it takes a while, and you get for it to finally top out. But anyway, it's getting overbought in a lot of ways.
Right, and I mean, that is a really low volume bar today. I mean, obviously with the holiday, for some people it might be a lower volume, but that's extremely low, even for holiday trading, I would say.
Yeah, yes, definitely. A quick look at the gold and silver cross indexes. The Golden Cross has been moving up fairly well. The Silver Cross Index, not so great. It's still got a declining tops line, and this is basically an IT trend model buy signal. This is what it measures, the percentage of stocks on that buy signal. So there's right now 68% of S&P 500 stocks are supporting the move. That's not terribly, I mean, it's certainly not as good as this, which is up to over 80%, but it's
2/3%.
Yeah, it's definitely fading. The support is fading on that, but it could, at that level, it could still continue higher. It's not like the doomsday prediction. The Golden Cross, of course, is the 50 EMA, moves up through the 200 EMA. So that's actually got a higher reading than the Silver Cross Index at this point. That's a good base, that's for sure. not the best. As you can see back here, it was up close to 90%, 85 here. It keeps getting lower, but anyway, making some progress there. This is our climax chart. It shows climactic, ultra short-term climactic activity. None today.
No.
Thank you very much. So,
even on Friday, though, you can see that there were, I mean, the readings weren't very climactic.
No, they
minus
weren't.
the fact the VIX was getting close
Right.
to the top Bollinger Band.
Exactly. Short-term indicators. The STOB for breadth and STOV for volume, they have been contracting, moving back towards the zero line. One thing to keep in mind with this indicator or these indicators is that they can go down for two reasons. One reason would be that there's less, I'll just say it, the up pressures are decelerating. So there's still up pressure, but it's getting kind of neutral. And so it's going to default its way back to the zero line or towards the zero line. When you have negative activity, that's what brings the indicator down faster. Like here, you look, obviously you've got still upside pressure, but it's diminishing, and so it's pulling back to the zero line.
Yeah, I know we talked about this. Well, you and I talked about it last week. I don't know if we talked about it on the show in particular, but I know I'd been, well, we both were really concerned about the fact that those short-term indicators have been trending lower and lower, while prices were getting higher and higher. But when you added that breadth to the bottom, those two bottom windows, and we could see that, breadth-wise, it's not what you want to see as you're making new all-time highs. I mean, you'd certainly hope that you'd get more participation and start seeing those trending upward. But the fact that breadth is still rather flat versus declining with those short-term indicators makes it a little less, I don't know, a little less of the flag isn't quite as red, I guess.
Right. This is very steady. This is so unusual. As you can see, this is a very active, both of these are very active indicators. And I'm going to be talking about this just in a few minutes, going a little deeper on that. Intermediate term indicators, silver cross, declining tops. We've got some still declining tops along the PMO, although currently it's higher than it was the last top. Negative divergences here, here, here.
Yeah, I noticed that the ITBM is actually getting really close to a negative crossover now, too.
Actually, yeah, I didn't point it out. Both of those ITBM, ITVM topped today.
Not something you want to see on.
No, again, it could be diminishing upside pressure, but that's not a good thing at this point. Okay. Back to the short-term indicators. As I said, I wanted to cover that more deeply. The thing to watch out for here is try to track the tops of the price tops and then see how it's behaving ahead of those tops. Obviously, in real time, you're going to be moving to the right as it proceeds higher. But right now, we've got the all-time high on right here, and you can see heading downward. And so when you this is a non-confirmation. Prices are headed higher, indicators are bleeding off, and we're getting that on these hard indicators. These, let's see, what do I call them? Direct read, actual readings of 20 of prices above the 20, their 20 EMA. I mean, that's not indirect as you get in these kind of indicators where you do a calculation, and it can be hard to directly connect with it mentally what it is. But notice that here we have diminishing stocks ahead.
Less and less
CMOs rising,
participation, yeah.
and so that's what you like to see. Now, after the top, the prices of the indicators moving down, that's just a confirmation. That's just tracking along with what price is doing. No surprises there. Now, one thing I did is I'm looking for something like this. The market making new highs, and this just steady flat. I mean, it's just really hard flat there. Let's go to the next chart, which moves us back to where we can see early 2018. And here we've got a similar configuration on both of these indicators compared to, similar to what we have currently. And that came ahead of this. So I'm not saying that's what's going to happen, because all we have right now is 2 data points essentially, and this gives us a hint. Maybe the read I'm getting off of it is correct, but don't want to read too much into it at this point.
Right.
Notice here, as I was setting up this charts, I also noticed something rather off the subject, but here it's markets making another high equal to that one. And notice that right before it, these indicators drop below the 0 line. That's not ever a good sign. And then when it went up, and just as it was rolling over, they turned down at or below the 0 line. Not a good thing to see.
Right. Anytime those indicators are oscillating below the 0 line, you're generally going to be seeing a lot of bad behavior, I guess is what I would say, by the price action. I mean, I had a chart, I don't have it right now, but where I'd highlighted those points in time where it was oscillating below the 0 line and when it was oscillating above it, and there it's clear, when it's below that 0 line, things are dicey.
Yeah, I also almost forgot to show, but notice how steady these are, and as compared to what we have here, for example. Mm-hmm. This is on that parabolic up move, and of course these were mostly above the 0 line. Let me just change the that's not what I wanted. 3 years.
There we go.
Okay. So yeah, here mostly above the 0 line, some dips down below. Again, mostly above, a little more negative than the one above. And then you get here, and it's really all over the place, even though of course you get the the correction, and then it's going steady up again. But it's, look at the
yeah, the oscillations are really wide.
Just looking at a earthquake chart.
Right. All of a sudden, it's starting to move a lot higher.
Okay. I think I've covered that enough.
All right. Well, I'm going to steal it back. I wanted to show.
Oh, okay.
Yeah, I wanted to show the put-call ratio chart because I did talk about that earlier in the program. So I just wanted to point that out. And then gold real quick. I'll look at that and then I'm going to pass it right back to you. But this, granted, these are not updated since Friday, but we're not going to see that big of a change. Now, I wrote about them being overbought, and somebody wrote me and said, well, wait a minute. They don't invert their scales. Wait a minute. Everything's at the bottom of the chart. What do you mean the put-call ratios are overbought? Well, we flip it, because if you look at the readings, right, they're getting smaller and smaller as we move higher and higher. When you look at the put versus call, right, you've got in the bottom is your denominator. And the bigger that denominator gets, the bigger it gets compared to the top part, the smaller and smaller and smaller your number is going to get. So basically, when the put-call ratio is moving up this high, that's telling you that we're getting a higher reading as far as the call side of things. That means people are more bullish. They're getting the calls. And so sentiment is contrarian. If everybody is starting to feel extraordinarily bullish, typically that's when you're going to start seeing those reversals in the market. And so if you do the matchup here with these tops, and unfortunately I don't have that on this chart, but typically when you do the matchup here, you're going to see that decline come off because people were extraordinarily bullish. And so that's what I'm watching for. That's what I meant by the put-call ratios being overbought. They're at the top of the range right now, and typically that means that everybody's especially bullish. And when people are especially bullish, that's a problem. The other one was the name exposure, and this is the National Association of Active Investment Managers. So this tells you how exposed the big guys are to the market. And what I've found is when they get really exposed, when exposure gets very high, of course, that means they're very bullish, right? And high bullish activity should mean you're going to get that price turn. But what I find with these guys is a lot of times they're right for a while. So right now we have those really, really high exposure readings in comparison to what we've had previously. And so at this point, when I see these high readings on the name exposure, that's giving me some info that, okay, we might see some more upside here, but we need to be prepared for things to turn south. They're very exposed. They're going to pull back their exposure very quickly when things start to go the wrong way. But right now they're very exposed, and this could be our signal that we're going to see a move to the downside there. And then the other chart I was going to show, and like I said, and then I'm going to give it back to you, and I'm certainly interested in your thoughts about gold right now, especially since what you told me earlier about, what did you say? You were in gold for like 10 minutes or...
I think more like 5 minutes.
5 minutes. All right. So this is my gold chart, and I've been watching in rather bullish fashion, of course, a bull flag. That's sort of been my background to looking at this daily chart. Now, I realized when I did the flag, bull flags, you look at the height of the flagpole, and when you get the breakout, that's the height of the price move you should expect on that side. Well, I wasn't expecting that kind of a move to the upside. I was still looking for it to come up here and test that high, though, that we had back at the beginning of September. And instead, of course, gold has now dropped below its trading range that had been in, that I had marked on Wednesday. And here's that 50-day EMA negative crossover. And this is what gave us a neutral signal for gold. Meaning, when we say neutral, that means either fully in cash or completely hedged. We're not, when we do a neutral signal, that's not like a short signal.
It's a soft sell.
A soft sell, exactly. And you can see that we're also getting that pullback on the discounts, but we still have a pretty high discount rate, and that's your sentiment. So we're still, the sentiment is still bearish, and we're seeing the prices moving lower. I'm still looking at this area here at about 1425 and 1400 as pretty good areas for support. But the PMO gave us that sell signal. You can see that as far as the scooter ranking goes, which measures your internal and relative strength in the intermediate term, that's really failing. And then I have on the bottom the correlation between gold and the dollar. And right now it's returning back to its norm, being that if the dollar goes up, gold typically will go down because it's denominated in dollars. So that's the expectation. But sometimes this correlation will move around. And right now I think the dollar is looking especially bullish, and now we have gold looking especially bearish. So I did want to point that out. But we've got about 4 minutes, actually a little less. So I know you had another chart or two you wanted to share.
Right. Let me get it back here. All right. That's not the one I wanted to go to. Okay. Yields. We have exactly one inversion here, and the as of Friday, the 1 month is yielding higher than the 3 month bill, and that's it. The rest of them are lined up correctly, shall we say. But notice the double bottom, and it's certainly acting as if it's going to move higher, and just have to accept that.
Yeah, the bond chart's looking, yeah, I mean, at least the TLT chart is pretty bearish right now.
Okay, I always look at this, and it pays off once in a while. I was looking at it this weekend. I thought, oh, well, we're always talking about inversions, yield curve inversions, and what I noticed, another term we could be using is that the yield curve is compressed. Everything's jammed up against one another, and we have, here again, 2 data points. Here, this could be a sign of weakness to come on the stock market. Here, it's certainly correlated with it, and we had some compression in here. It took a while to come about as far as the market decline, but you notice that now it's getting closer to the 0 line, and that's just not going to be good. I'm not looking forward to negative interest rates.
Yeah.
I'm just going to take all my money and put it on the front lawn and burn it.
Now, that's not the advice people want to hear from us.
No, that's true. That's not recommended. Do not try this at home. But anyway,
right.
The this area of the yield chart is atypical, and I wouldn't, I think a lot of it's meaningless. I don't think I'm going to get any meaning out of it. So we're about at the end of our rope here, aren't we?
We absolutely are. Yeah, I mean, that compression, that's the thing, is trying to figure out whether those squeezes are something important, and trying to, just kind of get a feel for it. But yes, we do need to close it off, everybody. And I hope you join us next Monday at 5 p.m. Eastern. And we will see you back here then, I would hope. Happy trading.